It's time for Top That Trade. Joining us right now are two favorite players, Alan Duckman, the Chief Market Strategist at BullseyeOption.com, and Phil Flynn, a Fox Business Network News contributor, here for our strong military-style trading safety strategy session. Round number one, how do you reduce risk trading stocks?
Well, this is the easiest part of trading and also the hardest, is having the discipline. Now, for a stock trader, what you can do is you can have smaller positions with a longer time frame where you're not encouraged to make as many decisions. But the key to trading, it doesn't matter what you trade, the key to any and all trading in any and all markets is having discipline and sticking to your plan.
I think that's a good idea. And of course, you got to trade within yourself. You can always go to your traditional allocations when it comes to your stock portfolio and your risk portfolio. If you're younger, I highly recommend that in stocks, you should be anywhere from 90% to 100% in stocks in a diversified portfolio, such as a fund. But I'll tell you this, the key thing is that for everybody, it's a little bit different. You have to understand your risk tolerance, because when you're under pressure, you usually make bad decisions. So if you're that type of person, stay away from it, and we can go from there.
Round number two, how do you reduce risk trading futures?
We always use options. I mean, options is a way where you can predefine your risk, and there's so many variables that you can use when it comes to futures. Not only can you just buy puts and calls, and if people don't know what those are, they're basically the right to own a futures position or be short a futures position, betting on the market to go down. Right, but not the obligation. So you basically put your money down, you make your bet, and you have to do it within a certain time frame. And if you're right, you can make a lot of money. If you're wrong, you can only lose what you put into it. But you can get even more complicated. You can use combinations of futures and options, bull spreads, bear spread, butterflies, that are all basically limited risk. So if you don't understand that, call a broker or call a professional, and they can help you out with those strategies.
Yeah, the problem with futures, you can make money. They give you unlimited potential on the upside, but you also have theoretically unlimited potential on the downside. So you've got to control your risk. You're able to do that much, much better now than when I was a kid and a young trader. The markets were only open a few hours a day, and then there was the night markets that you could open up sharply higher or lower. That doesn't happen anymore. But I recommend, like Phil said, using limited risk options. There are so many strategies, so many ways to attack. But the best part is, because futures have leverage, there are big potential profit opportunities there.
Round number three, what are your trade allocation tips?
Well, when it comes to trade allocation, again, you want to not gamble. Divide your account up into certain slices of pie, so each slice of pie is equal, so no one trade makes you or breaks you. So it's not gambling, it's probability, because what you have to do is be in this for the long term. You're going to have winners, you're going to have losers, but obviously the key is to not put any big amounts into any one trade.
And what the big investors generally do is that they can reallocate from one sector to another. For example, right now, we recommend to be heavily long energies, right? Because energies are in short supply. They will be for decades to come. So those stocks could be very good. Of course, during the pandemic, way back when, everything was about buying the tech stocks because we were working out of home, and over time, those sectors change. And the key to long-term success in those is knowing when to get out and when to get in. If you can't guess, just get a little bit of everything and you're going to be okay.
For the bonus round question for today, the answer will be true or false. The U.S. must spend at least a full percent of GDP just to maintain its military might. True or false?
I think we spend more than that. So, yeah, I think it's true.
I think it's false.
It's absolutely true. A winner chicken dinner for Alan. That does it, guys. Thanks so much. Great job. Business First AM will be right back.